Hope everyone's had a good trading day today. So I really just wanted to share some quick, do a quick recap of today and just share some thoughts on trading range days. So first things first, this is the spider, and one reason, again, I've shared it before and I'll try and share it every time, is one reason I switched to the spider is I really like the ability to trade small. And when I say small, I mean, you can trade 10 shares if you want. You're going to lose because of commission if you're only trading 10 shares. But, what I'm saying is you can break it down. Trade 50 shares, trade 100 shares. You could trade 1,000 shares. There's plenty. There's not a limit. And, the truth is, if you can trade small, you give yourself this tremendous ability to, scale in, to properly manage trades, to take profits. To give you an example, I didn't take this trade. It'd been, hindsight, one of the better swing trades of the day, but you sell below this bar, you take part off at 20 cents or 20 ticks. That's about 2 points in the Emini, and maybe you swing the balance, get out above this bar. But either way, it allows you to properly manage trades. So let's discuss this day. And let's first look at the day. So we get bar 1 and 2, if anything, it's a swing buy above bar 2. Bull breakout, probably a little more up. So you can buy and scalp. And look what happened. So the bulls, basically just bought the market and scalped out for 20 cents, about 2 points. So if I was to look at the E-mini, this is the same chart, it's the E-mini, so basically the same market. 850 or 5080, 58.5. So yeah, bulls scalped out for 2 points. And if we look, we immediately see sellers. So this is kind of what I'm talking about. Let's say you're over here and you see, oh, bull breakout, I'm going to buy this close. And then you buy the close, and you're thinking, darn, I'm disappointed. Well, if you trade small, if you're starting out, say you buy 50 shares, put your stop down here. Well, guess what? You now have the ability to buy 50 more shares at 50%. And look what happened right there. And then you can get out at your original all the way over here, or you can hold. In either case, you can buy this close, stop down here. Yeah, first down will fail. If bulls get out, then get back in. And then they, theoretically they get out below here, they go short. Then bears get out, bulls probably get long. But then what do they do here? Maybe they get out. They definitely get out here. But then what? Then they probably got to buy. Then they got to get out. And it's really a mess. Instead, you can trade small, Whenever you see a breakout, someone asked a great question, and I applaud them, whoever it was. They asked about breakouts. And I don't remember their exact question, but it had to do with, how do you associate, how do you character, here's a breakout, why did this reverse? They didn't say that exactly, but it's kind of what they said in a different way. But Al's response was this, until you have, when you look to the left, we see, oh, a bull breakout, bars are getting bigger. Yeah, well, look to the left. Bears are going to put their stop up here and they're going to sell. And they're going to make money. They sell more, make money. We get a bear breakout. Oh, look, it's going down. Stop up here. Well, look to the left. Bulls, they know that, price bounced here. They're going to buy, put their stop down here. So when price starts to fall, they're going to say, gee, that's a great place to buy. I'm going to buy this low, stop down here, and then we reverse up. Same thing over here, bull breakout, but the bars are getting weaker, starting to get bad follow through. What a great place to short. And traders who will sell up here, scale in higher, put their stop up here, they sell 10 cents, 20 cents higher, wide stop, they're going to make a lot of money. And it's the same thing with today. Look what's happening. If you're a bull and you bought above here and you didn't get out, maybe you get out here, you make 20 cents. Instead, if you say, gee, bull breakout, okay, few legs up, probably a trading range, I'll just sell, put my stop somewhere up here, and look to scale in higher. Well, you scalp out, or maybe you scalp out down here. Down here, you're saying, gee, big tails, bad follow through, start to channel down, probably at the bottom, very close to the bottom of some sort of trading range, I'm going to buy. And if you do, you will get rewarded. You got to pause for a second. All right, well. So I was trying to, normally I don't like to talk about stuff I'm doing, but trading range day, bulls are trying to buy at 30, you can see, look on any chart, a Emini spider, this low, it's logical for buyers to buy this low and scale in. This low is 46, and you can see we paused at 37. So you have a lot of bulls that bought the 46, that bought the 1240 low at 46. The correct price is 225.46, trying to scale in at 225.36. Price only went to 0.37, so they could not scale in. But that's exactly what I'm talking about. When we fall below something, that's why traders don't put their stop here. They don't put their stop here and buy. They're doing the opposite. And look what happened. The reality is, some bulls would get out. I know Al said he bought this low 61. I don't remember where it was, 60. Well, I got to find it. I don't remember what he did. He bought somewhere, and he could not scale in 1 point lower, so he ended up getting out. And, but he even said, the reality is if I hold, I'll probably make money. Same thing here. Some bulls are going to buy this low, try to scale in. Price is going to come back, and they're just going to exit for break even and just take a loss on commission. Other traders know that the truth is if they buy this low at 46, they can probably scalp out at 56, or they'll be able to scale in and take the profit. Other traders know that, I'm less confident about what I'm about to say, but other traders are going to say, gee, I'll buy above this bar, put a stop way down here, and buy more above the bull bar. The reason I'm less confident about that, that's probably okay, but I'm less confident because time of day. There's only an hour left, and it's possible, they could get trapped. I think sellers above, but we're too low in the range for me to be willing to take that trade. So, that's what, when I said hang on a minute, or hold on 1 minute, just about a minute ago, I tried to buy at 37 or 36, and that just did not work out. I didn't get filled, but and I was too slow, and price never reached it. anyways, you know, that's kind of the stuff I'm transitioning more towards is just working on, you know, trading the way the market is, trading based upon what the market's doing and not, you know, I used to always try and swing trade, but now I'm trying to, you know, flow with the market, if you will. And if it's going sideways, scalp. If it's trending, try and swing. You know, and, you know, the truth is, on a day like today, I could probably just buy at the market. You know, some traders will, you know, instead of trading half size, they may trade a fourth size. So to give you an example, let's say your max position, you don't want to trade more than 100 shares. And normally traders think in terms of risk as a dollar amount and not the amount of shares, but it's easier for this example. Let's say you don't want to trade more than 100 shares. And normally you trade 50 shares and scale in another 50 shares. Well, let's say instead you say, gee, you know, this might go down far. I'm going to just buy at the market. So you buy at the market and you buy 25 shares at the market. Then you buy another 25 shares 10 cents lower, and another 25 shares another 10 cents lower, and then maybe even another 25 cents, another 10 cents lower. You know, obviously, I'm sorry, I said 25 cents. You buy 25 shares at the market, you buy another 25 shares 10 cents lower. So 46, you buy 25 shares. You buy another 25 shares at 36 cents. You buy another 25 shares at 26 cents. And maybe even another, you know, maybe even another 25 shares at 16 cents. However, usually when you scale in 3 times, you got to be careful because the trend may have changed. But the reality is, you know, sure, that's not a lot of money. It's 25 shares. And right here, if you bought 25 shares and price goes straight up, you take a profit. If you're willing to trade that way on this kind of a day, you're going to do very well. And that's how traders trade. You know, that's, you know, used to in the past, I would be so focused on, you know, always in, you know, you buy here, you hold, you know, you get out here, you go short, you buy, and then you hold, you know, maybe you get out, but you get back in, and then you got to get short, you know, that's great. You know, it works, but it's so difficult on a day like today, and it's stressful. You know, that kind of trading is fantastic when you, on days like this, where you buy, you ride the wave up, and you make a lot, but most days, it's not that fun. So, you know, the truth is, trading range days, make sure you're buying in the bottom third. So if you were going to split this day up into 3 parts, let's say here's the middle, you know, technically this would be 3 pieces. You'd have an upper range, a middle range, lower range, but you get the idea. You know, right now we're in the we're getting into the buy zone, you know, kind of the bottom range. So you don't want to be selling down here. The reality is, and the odds are, we're going to bounce. So it's really all I have for today. You know, comment below if you have any questions, and you know, but plenty of traders will swing this kind of a day. You know, you can sell, stop up here, and maybe you sell this high, and you sell more here, and then you sell more somewhere up here. You know, if you listen to Al's new course about scaling in, he talks about that, and then you look to exit all right here. So maybe let's just say you sell here, sell more here. Look what happened. Maybe you sell this close, sell more here. Look what happened. So anyways, hope that helps. Comment below in the comment section if you have a question. Thanks.